Is this just a repeat of 2011 where we tagged 50 and then we crashed back down? We didn't recover for another 14 years. No, it's not. This is the simplest explanation as to why this is not a 2011 market. You can see here in 2011, we hit 49.50 over here. It was at 49.60 about. And within 5 days, look at these candles. 1, 2, 3, 4, 5. 5 business days, 5 trading days, we hit $33. That is a huge fall. We're not seeing anything like that this time. We saw the same thing in 1980 where we hit 50 briefly on January 21st. Within a week, we were down to, I think, in the 30s again, something like that. It was brutal. This time is not even close to that.
Gold continues to hold near record highs as investors brace for renewed inflation data and central bank uncertainty. Meanwhile, silver remains a focal point for traders eyeing industrial demand and tightening physical supply. Recent reports show bullion demand climbing, while mining output struggles to keep pace, signaling that precious metals may be entering a new, sustained bull phase. Rafi Farber, a respected metals analyst and market commentator, revisits the lessons of 2011 when silver briefly touched $50 before collapsing. But unlike that era, Farber argues today's setup is fundamentally stronger, driven by debt saturation, relentless monetary expansion, and a global awakening to the limits of fiat currency. This isn't 2011, he emphasizes, because the foundations of this rally are much deeper and far more explosive. His conviction points to a structural revaluation of silver rather than a speculative spike. If you believe silver's next move could reshape markets, don't miss what's coming next. Like, share, and subscribe for more updates from the channel. Your source for honest insights on gold, silver, and the global financial storm ahead.
Is this just a repeat of 2011 where we tagged 50 and then we crashed back down? We didn't recover for another 14 years. No, it's not. I can say that almost definitively. You can't say anything definitively in markets, but as close as definitively as I can get, definitively, this is not 2011 market. And I'm not only going to point to the recent price action because, in 2011 we hit 50 and then we immediately fell down within the next 5 business days to about 33. Nothing like that is happening now. Why is this not the 2011 market? Well, it looks like we're about to break back through 50 again today. Could be. Maybe by the time this goes online, we will be back above 50. That would be the first time we double tap 50. Didn't do that in 1980. Didn't do that in 2011. 2011, we didn't even reach 50. We reached, I think, 49.50 or 49.60. This time we broke through 50, hit about 54, went down to about 46 or something, was it? And now we're almost at 50 again, and it's already 2-3 weeks later. We're holding in the 40s comfortably, but let's go to the slides. Getting to the price action. This is the simplest explanation as to why this is not a 2011 market. You can see here in 2011, we hit 49.50 over here. It was at 49.60 about. And within 5 days, look at these candles. 1, 2, 3, 4, 5. 5 business days, 5 trading days, we hit $33. That is a huge fall. We're not seeing anything like that this time. We saw the same thing in 1980 where we hit 50 briefly on January 21st. Within a week, we were down to, I think, in the 30s again, something like that. It was brutal. This time is not even close to that. But let's get into something a little bit more in depth here. You can see this is an article from May 10th, 2011, about 9 days after the run to 50 or the run to 49.50 in 2011. You can see here back to this chart. This is April 30th, I think, when we hit the closing high, or April 29th, one of those days. CME, the world's largest commodities exchange, hiked margins to $14,000 per contract from $12,000 effective May 5th and again to $16,000 effective May 9th. Prior to April 25th, the margin stood at $8,700 per contract. So they hiked margin to $16,000. Remember, the CME hiked margin to $16,000 per contract in order to get silver prices down, and they succeeded in doing that very well. Where are we now? What's the margin requirements? Well, I'll give you this PDF directly from the CME. You can see here this business date, September 26th, we are at $16,000 margin, the same margin that was required after the crash of the silver futures market in 2011. Basically, what I'm saying is that margin requirements are the same as they were in 2011 at these prices in the upper 40s, but this time it's not pushing futures down. In fact, we're having a big bounce today, which means that the fundamentals of the silver market are a lot better now than they were in 2011. But let's go to the next slide. These are the silver supplies in Shanghai to support their futures trading market for silver. You can see here we are at an all-time low of 623 tons. This is down from a high of over 3,000 tons in early 2021. We are about 20% of that now. So 80% of the silver in Shanghai has been sucked out since 2021. But yes, China is very low on physical silver now to support their futures trading over there. This is a worldwide phenomenon. Now, this is an important technical pattern here. This is the silver to S&P 500 index ratio. So you see here that since 2011, last time we hit $50, that was a high for the silver to S&P 500, meaning the S&P was very cheap relative to silver. Silver was at a high relative to the S&P, and since then, silver has been falling. It looks like, first of all, we hit a double bottom hit in 2022. You could arguably call this a triple bottom if you want to count this as two tags and it looks like July and October or something like that. But anyway, it looks like we have a firm double, maybe triple bottom over here, and we haven't gotten close to it since. But we still have to break through this trend line here on the top, and that connects the 2016 top with the 2020 top and the recent top that we just saw a few weeks ago when silver hit 54. Once this breaks, I think we can kiss this bear market that's been in place since 2011 versus stocks goodbye. It arguably ended over here in early 2024, and we are on our way up now, but we do have to break this trend line. And in another perspective, it's possible that we already have. You'll see that over here. This is the same chart, except it's flipped. This is the S&P 500 to silver ratio. This is silver to S&P. This is S&P to silver. So basically, same ratio, just flipped. You can see here that in this angle, it looks like we already broke through, right? If we broke through it to the downside, that means that silver is becoming more expensive relative to stocks. And this is the ratio that is really going to get the public attached and realizing that silver is moving higher because credit is moving lower. Then you're going to see a whole bunch of stock portfolios plow into real money, and that will be an endgame signal as well. So we see here that we broke through this trend line. We're going to break back through it again. It says here that we are at 139. That is still below, that's just above the trend line now. So we broke through it briefly, broke back above it, and it looks like we're going to break back below it today with silver up about 3% on the futures market. Once this trend line breaks, we're going to head towards the 2011 lows, and the 1980 lows are even below that, but we'll see that over here. This is the same ratio, but stretched out to 1970. I put two squares here, or two rectangles in blue. You can see here's the same trend line from before, except zoomed out. You can see we broke it over here, and this says we're at 139, and the trend line looks to have broken through at about 144, 145 something. These are not exact. There's slight differences in the way these are calculated, and I don't know the exact differences, but they're close enough. But the reason that I put two rectangles here, one here and one here, is that this pattern over here, looks like a repeat of the pattern over here from 1970 to 1980. This is more drawn out and more extreme, but you can see here's a peak. The corresponding peak over here is in 1972, 1973, something like that. And then we fell down, meaning silver became way more expensive relative to the S&P by 1974, 1975. And then we have a little bit of a rounded peak over here, which would correspond to this over here in the mid 70s. And then we went down to the 1980 peak, where silver was the highest value relative to stocks, and stocks did nothing compared to silver. It looks like if we break this trend line down here, we could head into the equivalent of 1980. This is it's a rhyming pattern here. I don't know if it's the exact same thing. It's never the exact same thing, but it's pretty close. And yes, we are going to get to 1980 numbers, and once we do, there will be panic and blood in the streets, or silver in the streets. I think, wait, what doesn't the unicorn have silver blood or something? So it'll be a unicorn, right? If we do break through 50 today or tomorrow or this week or anytime soon, it'll be the first time we break back through 50 without an immediate crash in the silver price. It looks like we are going to accomplish this any day now. And when we do, we can probably confirm 50 as a new baseline for silver trading. And yes, once we get the final crunch in the dollar and the final printing round after that, then we will skyrocket to who knows what, who knows where. The numbers really don't matter that much. All that matters is that you recognize what money is and what credit is and the difference between them.
As the global monetary system trembles under record debt and fading trust in central banks, the cracks are beginning to show. Every dip in silver is being met with stronger hands. Investors who understand that physical demand is no longer a side story, but the main event. This isn't just about charts or short-term trading. It's about a generational transfer of wealth from paper promises to tangible assets. The storm that's been building for over a decade is finally starting to break. So, if you've made it this far, you already know what's at stake. The coming months could redefine everything we thought we knew about gold, silver, and the value of money itself. Don't get left behind. Hit that like button, subscribe to the channel, and turn on notifications so you never miss the next major update. The truth about silver's future is unfolding now, and you'll want a front row seat when history decides to move.